Hi guys and welcome back to the channel. Today we're gonna be talking about the best investing tips for 2022. 2021 has been an awesome year, maybe not in terms of living, but definitely in terms of returns, because the returns in that year has been incredible. With S&P 500, the 500 biggest companies in the US returning almost 30%, which is unheard of, it's really been a record-breaking year. The same for cryptocurrency, which has been absolutely exploding and really moving closer towards mass adoption. So 2022 is an exciting year, which really could go three ways: up, down or sideways. So let me share with you some tips which make you a better investor in 22. Starting off with point number one, which is buying the dip, which basically means buying a stock at the lowest possible price. Now, of course, that's the ideal scenario we all want to accomplish. Buying low and selling high. Sounds easy in theory. The question, of course, is how do you know if it's a low or a new high? And nobody has the crystal ball to tell you if the stock is going to tank further or increase in the near future. But there are certain fundamentals behind the stock. There are certain things that you can do to better predict the direction of a stock going forward. But generally speaking, a lot of the growth stocks that have been performing extremely well in the last year, towards end of 21, have actually taken quite a dip. And that's often because of tax loss harvesting, when investors want to materialize their losses to write them off against their gains, and by doing that actually have a lower tax bill. So that's often why you see towards end of the year stock prices coming down. So I do believe that going forward for the next few months, it's actually going to stay low until some time of end of Q1 before it then starts picking up again. I think it's a good buying opportunity, but of course you have to do your own research, and each industry is different. But I do believe that there's some good buying opportunities, some good stocks that you currently can buy at a discounted price, which will hopefully go up very soon. Point number two, which is actually kind of a contradiction to the first point, and that is don't time the market. Nobody ever knows when is the perfect time to buy. You might think the share price is actually bottomed out, but then it can tank even further down from there. And that's why I always think, if you think the stock has a long-term value and the opportunity to increase in price, and you see the good fundamental behind it in terms of revenues and profit the company is producing, then just go for it. Because in the long term, obviously you're buying a share to appreciate in value over time, especially when it's a dividend stock, because dividend stocks give you that quarterly or monthly cash flow. So that frees you up from having to time the market perfectly, because nobody ever will time it perfectly. Though I do think it's good if you see buying opportunities and discounted prices on stocks that you wanted to have earlier but were overpriced, go for it, but don't wait for the perfect opportunity. I always say better to dollar cost average every single month into the stocks or ETFs that you like and put a regular amount rather than trying to find the perfect moment, which doesn't really exist. Point number three, and that's invest in things that you know and understand. 2021 has been such an amazing year for investors, and that's why everybody started to flock into the market. So when my taxi driver told me about Dogecoin, I knew that trend is over. So try to avoid jumping onto trends and invest that everybody invests on just because they do so, but do your own research and really invest in things that you really understand. Now, I invest in crypto, for example. Do I know exactly how the blockchain is programmed? No, but I understand the fundamental value proposition and technology behind it and what it offers and how it differentiates itself from other investment classes. So I know enough where it could go in the future. Now, it may or may not happen, but I'm not blindly putting my money into an asset class that I have no idea about and just read in some blog online. So really do your homework, understand what you're investing, and if you're convinced and have conviction for it, then just go for it, and again, do it consistently rather than a one-off. Point number four, be patient. Now I know it's very tempting once you start investing in 21. A lot of young investors, they've gotten used to the high of getting a 2, 3, 4, 5 times X on their returns in a very short period of time. But let me tell you, that's not natural and that's not feasible. And as we've seen at the end of 21, the market actually doesn't always go up. It can also go down or trade sideways. And for 22, I personally think there's quite a while where the market will continue to trade sideways, basically not going up or down, but just remaining constant and stable. And these can be good times, because once again, if you do believe a stock or a crypto has long-term potential, then this is a good time for you to get in every month and buy at a seemingly low price, because in the future it will pick up. But you need to be patient and have the stomach for your investments not to immediately increase in value, or they may actually drop on you. And that's very important, not to panic sell your investments, because this is when you materialize your losses. So you don't make losses until you actually sell your assets. So once you hold on to it, it drops or moves sideways, that doesn't matter. So focus on materializing your gains rather than your losses, and be patient. 22 may be a great year, but again, it may be a sideward or downward year. Who knows? Hopefully it won't, but really focus on the long-term potential of your investments. Point number five, and that's a very important point, that is subscribe to the channel and like the video. Helps out a lot, much appreciated, and you'll always stay up to date on what's happening in the investment world. Thanks very much. Point number 6, and that's having realistic expectations. Like I said before, 21 has been an exceptional year. With the S&P 500 returning almost 30%, it's unheard of. Over the last 50 years, the S&P 500 averaged around 7 to 9%. So you can really see what the difference last year was. That's what we call a statistical outlier. Now, 22 may be a continuation of this, but more likely than not, it probably won't be. I don't think it's gonna go down. I still think it's gonna be good growth, but 30% growth for the entire 500 biggest companies in the US, I don't think it's realistic to be repeated. That's why it's important for you as an investor to have realistic expectations. Because I often see young investors, they say, okay, I'm gonna put all my savings, 100,000 into the stock market, I'm gonna get 50% return, I'm gonna have 150,000 and then I'm gonna buy my house from it. Sounds nice in theory and I would love to do this myself. So we have to be very careful in projecting historic returns for the future. So when in doubt, always be more pessimistic and conservative in your projections. And if you exceed them, great, but at least you have a realistic target to work with. And you'll be less sad and depressed if the market turns on you and actually drops for a while, which it does, and that's normal and that's part of investing. Point number 7, you hear me saying this all the time, but it's a very important one, and that's diversifying. Personally, I love cryptocurrency and it's been very good to me, and that's why a majority of my investments actually are in crypto because it grew so fast. But for 22, definitely I want to rebalance my portfolio. I want to take some of the gains and invest them into ETFs and stocks, because 21 was great for crypto, but who knows what 22 will bring. So maybe all my gains from last year will be eliminated by a bad 22. And that's why I want to balance my portfolio and make sure I don't have all my eggs in one basket, but really split it across crypto, stocks and ETFs. Even stocks, we all have a favorite stocks that we love, but it's important to have a few more stocks and not just put all your money into one particular stock. It's great and can go very well. If you invested last year into Microsoft, you would have done extremely well for such an established company, but next year might be a different story. So if you over rely on one company alone, you never know what happens to them, and that's why I always advocate diversify across different asset class, and in each asset class also have different parts within that asset class. And lastly, point number 8, and that's watching the hidden costs. Now these days it's never been easier to buy crypto or stocks on the go. There are so many apps and brokers and exchanges out there that make it so easy. They really gamify you buying the shares and cryptos, which is great and so much easier than it was just a few years ago. And in many cases they always advertise no fee trading, no costs involved, and that's great. Generally that is often the case, but I really urge you to look at the fine print and really analyze each transaction, because most often these brokers or exchanges, they make money on the margin, the spread that they charge you between the buying and the selling price. They may not directly charge you a fee or commission for the trade, but it's actually hidden and baked into the transaction. So for example, if you want to buy a Bitcoin, which let's say costs $50,000 at this time, so you get one Bitcoin for $50,000. So the exchange, for example, they will show no commissions or any fees included in it, but they will charge you for one Bitcoin $51,000. And that's very easy to see in this example that you're overpaying. But if you buy 0.03 Bitcoins for let's say $1,280, so instead of paying $1,280, you will pay $1,290. It may not seem so obvious and a lot of people don't bother checking, but this, when you do a lot of regular transactions, will actually eat into your profitability. So be very mindful and find a good broker exchange that charges you the least spread and allowing you to have the greatest return from your investment. And if you want to see my favorite broker where I buy my stocks and ETFs, check out the video over here. I thank you so much for watching, guys. If you enjoyed the video, give it a like, subscribe to the channel, and let me know in the comments which of those tips is your favorite, and maybe you have one to share as well. Stay blessed, stay awesome, and I'll see you in the next one. Take care. Ciao, ciao.